Confirmation bias, in the world of finance and cryptocurrencies, can be the difference between profiting or losing everything. When an investor is convinced that a particular currency or stock is going to rise, he begins to ignore the warning signs that the market gives him. Have you ever wondered why so many investors cling to assets that are in free fall, even when the data shows otherwise? This behavior is the result of confirmation bias, a mental trap that makes you look only for information that confirms what you already believe, while ignoring the rest. In the volatile cryptocurrency market, this is a recipe for disaster. The impact of confirmation bias is amplified by social media and online groups. In cryptocurrency investor communities, we often see herd behavior, where everyone seems to agree that a particular coin is the next big thing. The information bubble creates an environment where negative signals are ignored, and the collective euphoria only increases. The result? Investors put all their capital into something they believe is infallible, only to see their assets plummet when reality hits. Why do we ignore sudden drops and focus only on optimistic forecasts? Confirmation bias is at the heart of this behavior. Now think about the role that confirmation bias plays in analyzing financial data. When you believe an asset is on the rise, it's common to select only charts and reports that reinforce that expectation. The investor who is convinced that a cryptocurrency is going to skyrocket simply doesn't want to see the warnings. If something contradicts your expectations, it's easy to dismiss it as market noise. This kind of selective blindness can cause you to miss out on better opportunities or, worse, collapse when the market changes direction. And in high volatility markets, such as crypto, ignoring signals can be very costly. Confirmation bias can also be devastating for those trying to diversify their investments. Many investors continue to pour money into a specific asset, ignoring the fundamental rule of diversification. When you're certain you're on the right track, why invest in something else? However, diversification is the key to mitigating risk, and ignoring it out of pure conviction can leave you vulnerable to large losses. That's the blind spot of confirmation bias. It makes you feel confident, even when you're heading straight for risk. In the end, confirmation bias forces us to ask, are we really being rational when investing? In the world of cryptocurrencies, where fluctuations can be intense and sudden, it is vital to have a clear and unbiased view. The problem is that if we don't recognize how much this bias is influencing our decisions, we can lose sight of what really matters, the real data. Ignoring reality in favor of what you want to believe can be a fatal mistake in your investments. How prepared are you to face this?
With